What's going on, everyone? In today's video, we're gonna be identifying the trend. Identifying the trend is very, very important when it comes to day trading, intraday trading, swing trading, scalping, any type of trading. It's very, very important. We'll go over the type of traders and which one do you want to be. So, in today's video, we're going to be identifying the trend. Now, always the rule number one in the Forex market is to trade with the trend. What that basically means is, let me just make my charts more understandable for you guys. I usually have the black and white, just the black charts, just for psychology purposes, which I'll go over that later. What trading with the trend really means is that right here, right, you can see the trend is going down, right? The candles, the movement is bearish, it's going down. That is a downtrend, which means when you see something like this, you must only be looking for sells. Do not try to buy in a bearish market, because it's extremely difficult to know. You see these little blue candles, it's extremely difficult to know, like, when will this down counter trend. So these major trends is that the trends, and these little counter trends, right? Now, trading with the trend is usually a lot easier than trying to catch this move and this move and this move up and this consolidation. Rule number one, trade with the trend. The trend is your friend. Now, within the trend, that's when market structure comes in, right? You go and you look. Oh, by the way, when you're trying to identify the trend, do not try to identify the trend on the 15 minutes where it looks like this. This is very choppy and you're not gonna understand nothing. Go on the daily time frame, right up here. You click on the daily, you zoom out, and you see what the market, the flow of the market, and what's it doing. Now, you don't have to look over here, because that's like literally 2020 November. We don't need, that's irrelevant. Look at the most recent price action in this here. So that is telling me that, hey, the market is bearish, right? However, now, how do we know that, okay, the bearish market has now ended and now we are trending to the upside? A new trend has occurred. Now, if you remember, it's over market structure over here. So in a downtrend, you got a high, a low, a lower high, a lower low, a lower high, a lower low, lower high, lower low. That's a downtrend. In an uptrend, we got a low, a high, a higher low, higher high, higher low, higher, and so on. And this is just consolidation. This is when the market is just consolidating, where it's not doing nothing, just going up and down, up and down, up and down. So that's a downtrend. The market usually does one of these three things. It's either in a downtrend or an uptrend, or it's consolidating. Now, I would personally avoid trading consolidation if you're a beginner, just because it's really difficult to know, like, when it's gonna. Obviously, it's never this perfect, but just avoid trading consolidation and look for clear market structure, because when you have clear market structure, it's gonna be so much easier for you to trade these markets, right? Now, as you see here, we have a downtrend. Now, and then if I can show you an example on the chart, we have a high, low, lower high, lower low, lower high, lower low, lower low, lower high, lower low. You see what I mean? Until here. Now, what happened here is the market was downtrending, right, in a downtrend, and then all of a sudden we saw a clean break of structure. What that basically means is, when you see a rally, a bullish buying pressure, and it passed previous market structure, as you can see here, like here, all the lower highs never went above the previous high, right? See, this never crossed over this. and this is lower than this. Like the lower highs are never higher than the previous ones, right? They're always lower, except here. This is now higher than this. See how it broke structure? Now that indicates that market structure has been broken, and we could now potentially see a reversal of a trend. A reversal mean like now, okay, the bearish market has ended, and now we're about to trend to the upside. Now, we do not jump in for a buy up here. We have to wait for more confirmations. We have to have some sort of bullish market structure being formed before jumping in. We need confirmation. Now, this just means that, hey, this is sign number one that, hey, market structure has been broken. This was supposed to be a lower high, but now it's a low and then it's a high. It's a new trend, right? This is sign number one. Now we wait for market to pull back, and then if this doesn't pass this, which means a bullish market has now started to form, right? Now, why is that? Because if you look over here, do you see how if I connect these two together, right? Let me just actually make it right for you guys. And then this broke. That's exactly what happened in that scenario down there, which means market pulled up, broke market structure. Market was in a downtrend. It broke structure. It went up. It formed a new high, right? It broke market structure here, and then it went back. But when it came back to pull, it never went past this low, which means now we have a higher low. And when we have a higher low, which means this is a new uptrend forming, and that's when we jump in for a buy. Now as soon as I see this, I'm like, all right, uptrend has occurred, we have break of structure, we buy in and we ride it all the way up. Now this is episode 1, identifying the trend market structure. If you enjoyed today's video, please, if you don't understand, watch it again and again and again until you actually know all of this by heart. It's very simple and very easy to understand. Thank you very much for watching, and I hope you found value in it. And yeah, let me know if you have any questions at all. Thanks guys.